welcome to Messer Financial's Webinar Wednesday. Thanks for being with us today. Today we're going to go over the topic of Life Insurance Awareness Month. That's what September is. My name is Troy Felton, and I'm joined by my colleague Bob Long. We are with Benchmark Insurance Group. We're the life and annuity division of Messer Financial. So we thank you for being with us today and looking forward to going over life insurance. So why is there a Life Insurance Awareness Month? These are some stats from LIMRA, which is a research organization that has been around for nearly 100 years. And the important thing with any sales is really identifying the why behind what you're selling, right? And this statistic here with LIMRA identifies that almost 50% of people say that they would have trouble with paying their living expenses if their primary wage earner dies prematurely. And that's within 6 months. So a huge, huge need with the American population that nearly 50% are in that category. 40% of Americans believe that they need more life insurance. So people are either underinsured or they're uninsured. So what prevents people from asking about life insurance or from purchasing life insurance? One of the big things is they think it's too expensive, and that's really a misconception that we'll get to at a later slide. A lot of people think it's way more expensive than it actually is, and part of our job as insurance agents is to ask them the key questions and to show them how easily they can secure coverage. So we've all have seen GoFundMe, and a lot of times this happens when there's a death in the family and maybe some of their community comes around them and creates a campaign to raise funds for those that are left behind. And the important thing with really pitching life insurance and talking about life insurance is people can get coverage on a very affordable basis on their own without relying on something like a GoFundMe, which is really, it's a little bit invasive of the family's privacy. Sometimes it's time consuming, and the statistics with a lot of GoFundMes is a lot of times they don't even reach their target goal. So Bob is going to talk about some of the different types of life insurance, and then he's going to get into some common uses for life insurance, and then some uses for cash value life insurance, and then some business forms of life insurance.
Absolutely. Thank you, Troy. Good morning, everyone. Thank you for being with us. You know, Life Insurance Awareness Month of September really fits in well with what many of you are going to be involved in soon, starting the middle of next month as you're preparing and getting certified to go into numerous households over the 2.5 months that you're going to be involved in the open enrollment period. And we think this is a perfect time for you to begin thinking about secondarily when you're in a home and you're working with someone to get their health insurance, their Medicare supplement, their ACA plan, whatever it may be, you're already accepted into that household. You've already established your trust. People rely on and believe in and purchase things from people that they trust. You're already there. My suggestion would be that you plant the seed between October 15th and December 7th. I know you'll be tied up fully for that period of time, but what you want to do is to plant the seed for a later visit, maybe later this year or maybe early next year, when you can go back and talk about other things that may be just as important to that family as having their health insurance taken care of. That will establish you as the insurance person in that household. And yes, there are many types of insurance that you can bring up, and it'll be dependent on the family, the needs, uh, anytime you're working with a person or a family regarding life insurance, they're always going to be different. It's seldom that I run into two people that have exactly the same needs. There's so many things to consider. And we're going to give you a few questions a little bit later on that you can bring up to at least leave some curiosity and some thoughts in the minds of the families you're working with about, that is something we need to look at. We've talked about it. We know we need it. We need more. We need to look at different types of insurance. But regarding the different families with different sizes of families, different incomes, different assets, you're going to be able to say, okay, I'd like to come back early next year, for example, and let's review what you have in terms of life insurance, if anything, because there have been so many changes in the last 10 years, so many developments, so many improvements in the life insurance world, that what your goal is to provide a solution to a problem that most families have regarding life insurance. And yes, we've got low-cost policies, the term policies, typically for people that may be starting out with their family, with a new mortgage possibly, that know they need life insurance, but their income so far may not be to the point where they can afford a large policy in terms of permanent coverage, but we can give them the coverage they need with a life insurance policy. Anywhere from 1 year up to 40 years, we can lock them in to make sure that they're insured, especially the breadwinners in the household, to make sure that that future earning ability is insured for some period of time. And of course, when we look at term insurance, as a person develops in their career, in their income, in their added liabilities that they have as they move through life, eventually they'll want to have some portion of their coverage be permanent insurance. And that would take us to whole life policies, exactly what it means, someone's covered for their whole life, or universal life, a little more flexibility in terms of how long you want someone to be covered, the flexibility in the premiums that you pay. And then there's, if we become even more specialized, a guaranteed universal life policy will be basically a permanent term policy. That term is going to be someone's lifetime, so that once they establish the amount of premium based on the amount, their age, their underwriting classification, the status of their health, and so forth, that premium is locked in for the rest of their life. We can even get into index universal life, which allows someone to be able to accumulate potentially a huge amount of cash value in their policy. And in a minute, I'm going to talk about some of the reasons why index universal life may be the best way to plan for supplemental income on a tax-free basis in retirement. And then finally, variable universal life is where the premiums that are paid, in addition to paying the mortality costs for the insurance, any additional premium that goes in is money that's actually in the stock market. Now, we don't cover that here at Messer Financial and Benchmark Insurance. It requires a securities license. And those policies, you'll need to find someone to help out with that. But the vast majority of the policies that you'll be working with will be the previous ones that I've mentioned. The uses for life insurance, and many times there are incorrect myths about life insurance. Someone would say, I don't know that we really need life insurance. Well, if you're looking at a major breadwinner and you're counting on a number of years of continued income, you certainly need to replace that income if someone unfortunately passes away early before they've completed their number of work years in their career. So one of the main reasons for life insurance is to protect a family, to not be caught without those income dollars that were counted on to come in until retirement occurs. And of course, that can occur early, it can occur later on, but the income needs to be there for the family to raise children, to pay for the mortgage, to buy groceries, to pay taxes, all those wonderful things that we all have to pay in terms of living expenses. Then there are more people, when they think about life insurance, they think about final expenses, such as burial costs, such as paying off credit cards, revolving credit, a mortgage, and even more recently, in recent years, is paying off health care costs. I look at a lot of statistics, and one amazing statistic is that a person's health care expenses will be more in the last 6 months of their life than all of the other expenses added together for a full lifetime. So, as a matter of fact, the cost of health care is the primary reason for most bankruptcies. So we certainly want to look at life insurance to help pay for some of those unexpected expenses, especially later on as someone is older in most cases. And life insurance is a fantastic way to do that, because in any case, regardless of the use of the money from a life insurance policy, you're literally paying pennies on the dollar for what's returned in a death benefit. Again, mortgages, automobile costs, credit cards, that will take care of that for the remaining survivors in that household, for money that doesn't have to come away from their normal cash flow. There are also, I would say, most people I work with and have for many decades, they're concerned about their children, and maybe even more so for their grandchildren. People do like to leave a legacy for family members so that they'll have a little edge, maybe have a step up, and be able to remember that parent or grandparent or whatever type of relative it may be. People like to leave a legacy for their children. Many people also like to take some money and leave with a charitable interest, primarily churches or other foundations or organizations, maybe even their university. Whatever the charitable interest is, that is something that can be taken care of, again, with life insurance for pennies on the dollar. Educational funding for the children, for the grandchildren. Wouldn't it be nice to know that a grandchild who is now 2 or 3 or 5 or 6 or 8 years old would have their education paid for, or a large chunk of that, through a life insurance death benefit? And the last thing here, which has become extremely important over the last 2 or 3 decades as companies have begun to add and include what we call living benefits to a life insurance policy. And this is for the insured. This is prior to death, in terms of helping someone take care of the cost of long-term care, helping someone be able to possibly be out of work for weeks or months because of an accident or an illness, a heart attack, an automobile accident, where someone is not able to work for an extended period of time. These accelerated benefit riders, which include critical illness, which we refer to as a long-term care alternative, or chronic illness, is for the long-term care. Critical illness is for illnesses such as heart attack, stroke, cancer, something that's life-threatening, that's going to challenge a person's cash flow. This is what life insurance policies will pay, actually a death benefit while someone is still living. So those are things that when you speak with a family that you're working with, it's going to get them excited, get them their curiosity raised, so that when you go back early part of next year and begin to talk about some of these things, you're making people aware of something they've never been aware of before. Another item that I've worked with ever since I've been in the business back in the early 80s is a tax-free retirement income supplement that can be achieved with life insurance if it's properly set up and there are excess funds that someone has that may have maxed out their 401k or their IRA. they'd like to put money somewhere else, a life insurance policy is one of the best, if not the best places to put it, with a policy that's properly constructed, because the excess money that goes in above the cost for the mortality, the cost for the death benefit, that money can grow basically in a vacuum, because it's excess. It's more money that goes in that's not going to be consumed by the insurance company. It will grow tax deferred and can be tax free if that policy is properly structured. That's something else you may want to mention to a family that is well to do, has good income, is well rounded in terms of their assets. We mentioned medical expenses. This is something while somebody's living. If you've got excess money in your life insurance policy, you can take a loan on that policy or a withdrawal from the policy and apply to medical expenses that might keep some family from worrying about where's that next dollar going to come from, or we're going to face bankruptcy. Emergency funds for unexpected expenses to be there with a life insurance policy. And many people would love to knock out that huge cash flow each month if they have some money in a life insurance policy that they could use to pay off their mortgage 3, 4, 5 years early. Just imagine, take your mortgage payment, multiply it by 12, and multiply it by 4. That's the amount of money, if it's in that policy, that you can take and pay off that mortgage early and be one less obligation that you carry. And then again, college funding, which can be used for someone who has a policy or a family member, including children and grandchildren. These are things that you can do with a permanent life insurance policy when you talk with someone that is skilled, knowledgeable, and can work with them on this basis. And again, those accelerated benefit riders do raise a lot of interest. I would say there's a good portion of the policies that my clients have, they purchased as much for the accelerated benefits as they have for the death benefit itself. Another need for life insurance, other than the love and the obligation to the family, is people that are business owners. Life insurance can be a tremendous tool for business owners. If you want to attract and retain key individuals, we call that key person policies, so that a business owner can put together a nice plan. It can be even considered a form of deferred compensation through a life insurance policy for key executives that they want to retain as a benefit to their business. A key person policy is something we can help you with in order to set that up with key members of a person's business. Buy-sell agreements. When someone has a business that they have business partners in, there's always a consideration about what if one partner or more, if there's more than 2 or 3, passes away. How do we navigate taking care of that portion of the business ownership with the survivors, such as a spouse that passes, the business owner has a spouse, the business owner passes away? How do we pay off that family member for the portion of the business that the others owned? We can solve that issue for you and your business owners. So this is something you need to be considering when you're talking with business owners about how to retain key personnel, how to have a buy-sell agreement to pass on the portion of the business that someone may have when they pass away. Think about what a business owner has to look at. Some have to buy equipment, materials, supplies, inventory. Sometimes those costs can be large amounts that a company would need to borrow money from a bank, for example, and the bank wants some collateral for that obligation. So when you're buying equipment, whether it be a 10-ton bulldozer or supplies and equipment that you have for your business, then those loans must be collateralized through life insurance in case that business owner passes away, that bank wants to make sure they're going to get money for what they've allowed that business owner to borrow. It could be additional buildings that the business buys, or builds larger facilities or adds on to their facility to expand. All these things are going to require some degree of liability for the policy owners that must be taken care of for their business to grow, to borrow money to cover these large expenses. Life insurance is the tool that will allow that to take place. And finally, an executive bonus plan, again, for some of your key employees. It's actually listed as one of the few benefits that the federal government gives business owners in allowing them to share the cost or pay the cost completely with an executive bonus plan that can be set up for key individuals up to the owner, and we can help you navigate that in order to take care of some of these top level executives through a bonus plan to pay for a large life insurance policy with lots of long-term cash value benefit to that family. So these are just some of the tidbits. This is by no means inclusive of everything, but business owners do need to have and be aware of how life insurance can help them out.
Thank you, Bob. And one additional thing I'll say about the business policies is a lot of times there's confusion around some of those business policies where agents think, oh, I need to help determine what amount to, purchase this business. So what happens with those arrangements and with those policies is typically there's an attorney that draws up the purchase agreement, right? And the attorney helps to basically help the client establish the value of the business, right? And so as he's setting up that agreement, the insurance agent, that's where you come in and we can help you with all this, come in to offer the best insurance policy for that value that would be paid off on a buy-sell. So questions to ask your clients. These are just a few top ones that can really get things stirring in their minds. And a good thing to consider, sometimes life insurance agents get a bad reputation for being too salesy or maybe being too pushy. But sometimes the most effective way to establish the need is to ask the right questions, right? Ask a question that's going to really get the client thinking and realizing, oh yeah, I need to do something about this problem and this need. So some of these are, if something happens to you today, how would your family pay the bills next month? So I referenced a statistic earlier in the slide of about 50% of Americans say they would run into financial trouble if the primary wage earner dies prematurely within 6 months, right? So 6 months. Generally, a good rule of thumb in terms of what kind of protection you want to have in place is at least 5 years of replacing your income. So, if you're looking at half the population that only has 6 months of protection, that's definitely a big problem. Another question: if your paycheck stopped unexpectedly, how long would your savings last? Because that's another thing that maybe people put off life insurance because their idea or their perception of it being too expensive and they need to put money towards these other things. Well, a proper life insurance policy is going to be a large sum of money tax-free going to their beneficiaries, probably go a lot further than any savings that they would have at that point. What do you want your financial legacy to look like for your family? Obviously, people have a love for their families and they want the best for their families, and that's a big part of how they live their life. But another question is to get them thinking, because people don't like to think about death, right? But just ask the simple question of what kind of plans do you want to have in place once you die for your family? And then another one is more pertaining to job, and I'll get to this in one of the next slides. If someone has only life insurance through their job, a key question to ask is, what's your plan if you leave your job? How much life insurance would you still have? And finally, did you know life insurance is most affordable today? And the key point behind that question is it's never going to be cheaper for you than if you get it right now. Because the longer you wait, the more expensive it's going to get. So I have a few slides here about some myths versus facts with life insurance. The first one here is myth number one. I think life insurance costs too much. And the fact is, life insurance can be very affordable. I'll in the next slide, I'll show you kind of a visual of that. It could cost less than $1 a day, or even, 50 cents a day in some cases for some people. You can get more from it than what you pay for it in some instances. Bob talked a little bit about permanent life insurance with cash value, and if you structure those things properly, it can grow with a competitive interest rate that can be taken out tax-free to where you essentially are getting more than what you put into it. And then I mentioned your price today could be lower than it was on your existing policy. With this point here, it's really about the importance of doing a policy review for what the client has currently in place with life insurance. Maybe their term life insurance is coming to an end. Maybe they bought an old permanent life insurance that's not performing well. Some of the universal life policies from the early days that have since been greatly improved to where they have level premiums. So I mentioned one of the issues people have is their perception of the price of life insurance being too high. And this is just a basic grid. What we did is we took a male at a preferred non-tobacco rate class. So with the rate class, that's basically a class that's assigned to someone based on their health. Generally, you have a range of what we call standard, which is kind of the average health, all the way up to the preferred best. So this is one of the more healthy rate classes that we quoted here. But what you have here is a 20-year term for different age ranges for a male non-smoker. And as you can see, we mentioned less than $1 a day. So $15 a month, that's,
50 cents.
Yeah, 50 cents a day. So again, cheaper than Netflix. You think about the things that we spend our money on and we put off far more important things that can really go a long way for our loved ones. And you see as, each decade goes from 30 to 40 to 50 to 60, you do see how that price keeps going up, and really sometimes drastically once people are approaching life expectancy. And you see that in ages 60 and 70 on the 20-year term, especially with the 70-year-old with a 20-year term. You're looking at almost the same price as the guaranteed universal life. Bob mentioned guaranteed universal life earlier. It's basically a permanent policy. It's the lowest cost permanent policy that's out there. And it's basically guaranteeing that death benefit for as long as that person lives. And you can see for that 70-year-old, because that 20-year term is basically bringing them out close to life expectancy, that's the reason why it costs almost the same as the GUL, whereas in the earlier ages, there's a lot bigger difference, right? But this is a good graphic, and you could do something similar for your clients if you wanted to send out maybe a mailer customized, because a lot of you already have information on your client, whether it's their date of birth, whether it's their smoking status, some of their medications. You might have a general idea of what rate class they might qualify for. And even if you don't, you could possibly do a range of like standard to preferred and just send that out to them as a complimentary quote, just so you can kind of come against that misconception that life insurance is more expensive than it really is. Myth number two, a lot of people think that life insurance is too much of a hassle to buy. And in some cases in the past, for sure, that has been the case. In some cases, currently, that can be the case if a company is ordering a lot of medical records and, sometimes it takes a while to get to a decision. But for a lot of people, a lot of insurance companies are improving with their underwriting. It's new innovations, new technology, and so they're really expediting the process of that application and of that underwriting. So what we've mentioned here is there's really a new thing called the drop ticket application. So a lot of companies are picking up this way of applying for insurance, and it's basically where you as the agent fill in just a short amount of information up front, and in some cases you don't even have to get a signature up front. You just put in some basic information to get the quote ticket started. And then from there, the client can usually do the health questions on their phone at night at a time of their convenience, or the company might call them and do the health questions over the phone. So it's become a lot quicker with underwriting nowadays, and there's certain companies that we can point out that do maybe a better job than others with their turnaround times and with their underwriting. One carrier, at least for term, is Banner Life. They're one of the top carriers that is just really quick and really efficient with their process. And then myth number 3, life insurance benefits are only for after I die. And Bob mentioned cash value buildup that can be used within permanent life insurance policies, but also living benefits. So living benefits, I personally have seen this with people that I know, where they accessed living benefits from their life insurance policy while they're still living. It's something that can go a really, really long way for a person who has a critical illness like heart attack, like cancer, like stroke. And a lot of times when people have those illnesses, they fight it and they still live, right? And so here's a way to use this life insurance policy to benefit you and your loved ones while you're still living, to help pay the bills while you're out of work. So there's always going to be objections. So life insurance is definitely something that you need to ask the right questions. You need to establish the need. But ultimately, there can be kind of a hesitance for life insurance, whether it's procrastination, whether people don't want to spend the money, whether people don't want to just think about death, right? One of the objections is it's too expensive. We talked about that earlier. You can basically show them that it's not as expensive as they think it is by sending out sample quotes. Already have coverage through work. So some good questions to ask with people who only have coverage through their work, again, and I referenced this earlier, is what is your plan for when you leave your job with life insurance? Would you want to go ahead and lock in a low insurance rate now that you personally own that will last a long time, and it's not going to be dependent on whether you stay at that job?
Let me say something, Troy. I'll just give an example about life insurance provided by an employer. Probably our largest employer nationwide is the federal government. The federal government provides life insurance at very reasonable rates. Some of it is paid for, some of it you can add on. It's the federal employee group life insurance plan that many people have become dependent upon, that they can keep after their years of being a federal employee. But what happens is every 5 years, the premium increases. When someone retires, their insurance is cut in half, and the price goes up with each of these 5-year increments, and then it's cut in half, and every 5 years it's cut again, and the price goes up. You don't want to be in a situation like that if the life insurance is important to you and your family. And this is just one of many, many different types of insurance that's paid for by employers that people don't know until it's too late. Maybe they're no longer insurable for a life insurance policy when underwriting takes place, and they see their insurance decreasing every year and the price increasing. We want to make sure that you keep your clients out of that quicksand, is what I call it.
Thanks, Bob. That's good. So Bob referenced the policy costs going up, and just a key question there is just to ask the client, do you see that happening, right? And a lot of people will say that they do see that happening, right? There's a point here of insufficient. So with insufficient, sometimes some group life policies might only cover a year or two of that person's income. And a key question to ask if that's the case and they only have 1 year's worth of their income is, what is your plan for your family in year 2?
And 3, and 4,
yeah, and just
5.
At that point, just, let them answer. Let there be a pregnant pause to where it's kind of registering in their minds. Some people might say, maybe I'll get life insurance later. And I mentioned this earlier, but life insurance premiums are never going to be cheaper for that client than they are today, right?
And not only because of age increases, but also health. When someone is younger in great health, they'll get a lower rate, and that rate will be locked in on a guaranteed UL policy or for the length of the period of the term policy. But if you wait, not only are you seeing a price increase because of age, because your life expectancy then is a shorter number of years, but you also have to consider your health, because things do happen to a person's health, and you want to lock in as early as you can your good health, which is something that will save you tens of thousands of dollars later on if you can get insurance.
That's right. And then the objection of, well, let me just think about it for a while. And one of the big things you can say with this is, well, with life insurance policies, there is an underwriting process, and sometimes that can take up to 30 days, possibly longer. That's basically the insurance company's way of thinking about it as well, because they're thinking about whether they want to cover you as an individual based on your health. So not only with the underwriting turnaround time, but also there's something called a 30-day free look on life insurance policies. And basically what that is just a trial period. You see with anything that you might sign up for, it might say, 7-day trial period or 15-day trial period. Well, life insurance policies have a 30-day trial period where if the person decides, you know what, I changed my mind, I don't want this, they can get their money back for that first month's premium. So Bob's going to talk a little bit about the tools and resources and where to go from here, and then we'll close out.
Thank you, Troy. One of the things that we can do, if you'll give us an opportunity, is the resources that we have, not only years of experience, but also things that we've developed over the years that will allow you to design a case specifically for the needs of a person and their particular family. We can support you not only by providing the correct policy for your client, but we will educate you to the degree where you'll understand why we chose that company, why we chose that policy, so that when you sit down with that client, you will be the expert. You'll be able to answer the questions. You'll be able not only to answer the objections, but to preempt the objections. We'll give you those things if you'll allow us an opportunity to work with you. And basically, when you collect the information for us to design a plan for an individual, it's like you're taking pieces of a puzzle. And if you bring those pieces to us, not only will we design that case for you to meet the needs and the profile of your client, but we'll support you in whatever level of understanding you have of life insurance. Some of you have much more than others. Sometimes we learn from you. But for those of you that are less experienced, we will cover the needs that you have. Last night I was on the phone with one of our agents that had never sold a universal life policy before, but he has his first sales appointment today. We spent about 30 minutes on the phone. I went over those illustrations that he's going to present to his prospects. And during that 30-minute period, when he was very nervous, a little skeptical, unsure of himself, when we finished that conversation, he expressed to me how confident he felt that he could go in, answer questions that might come up, be able to explain the design of that particular policy as it met the needs and the profile of his client. These are things that we can do to the degree that you accept that and need that. We can do that for you. We can take you from being primarily a strict health insurance agent to be a very knowledgeable, capable, and a very successful life insurance agent as well. Many times you'll run across people that have impairments. We deal with that every day. We know the companies to go to that are going to be more, let's say, a little bit more lenient or a little bit more accepting. Some might be best for diabetics. Some might be best for someone that's had a coronary problem in the past. Some might be best for those that may be a couple pounds overweight, like many of us are. We know where to go because we deal with dozens of life insurance companies. That doesn't mean that we want you to become appointed with all those companies, but when you have a client whose needs can be met with a company that you may not be appointed with, we'll get you appointed, and you'll be able to sit down with our help, our support, our guidance, and be able to present the policy that you're going to recommend and be able to tell that person why you're presenting this one to them. We can go over illustrations with you to make sure you understand how to present an illustration, and any things that come up. Maybe when you're in that sales situation, and there's nothing wrong with saying, hey, I want to be honest with you. That's a question that I'm not familiar with the answer, but we'll get that answer for you. Bring those questions to us. If we don't know the answer, we'll find the answer for you. But most times, we'll be able to get those answers for you that you can go back and confidently answer those questions that may come up in a sales interview. We do have tremendous online support as well. As we finish up here in a couple of minutes, we're going to give you information about our website and all of the things that it contains to be a great tool for you and for your convenience to be able to get information that you need right now that's applicable to what you're trying to accomplish with your clients. There's just a tremendous amount of information on our website, and we'll give that to you in just a minute. So we have tremendous online support for you. We can help you with needs analyses on our website, for example. When you're not really sure and that family may not be sure what they need, we can give you the tools to extract that information. Again, you're collecting pieces of that puzzle. You bring them to us. We're going to put that puzzle together for you. So when you walk back in, you're going to have a portrait there that's going to meet the needs of that family. We're going to build that trust that you've already established. We're going to add to that to let them know that you have more than one tool in your toolbox. So this may lead to other sales as well. So the key thing is to ask the questions that we need in order to build that particular proposal for you, so that when you go back in, you're going to have exactly the recipe for the dish that they need to be served. So asking those questions, and there's only 4 or 5 questions typically that you need to ask that'll give us everything that we need. So you see our phone number there on this slide. You can call, get any of us. Any of us will be able to help you out. If there's something that one or more of us may specialize in a little more than another, we'll get you to that right person. So you're welcome to go to our website that you see there, www.benchmarkigroup.com, and call us. We can help you out. What our goal is, for those of you that are primarily concerned in health insurance, we want to broaden your market penetration with not only existing clients that you have, but enable you to talk with other clients, other referrals that you get, other people you run into that you're going to be able to talk with them confidently about more than health insurance, but life insurance. And next month, we're even going to step over and give you the opportunity to become an expert in annuities as well.
Yeah, thank you, Bob. And one quick thing I'll say on some of what you just mentioned is it's really good to think of the client's protection as a three-legged stool, right? One of the legs is basically protecting their health insurance, right? Giving them the most appropriate plan for health insurance. Another leg of that stool is protecting their family, okay? And that's what life insurance is. And then that third leg can be help protecting their finances, which is annuities. That's what we'll get into next month. But one thing that I'll say about just life insurance in general, if we look at those that maybe they're new in the business or maybe they're just specialized exclusively on life insurance, one of the hardest things from being just a life insurance salesman is finding prospects, right? And that's one advantage you as health agents already have up your sleeve. You have a step ahead of those that are just with life insurance because you already have the clients. You already have the prospects. It's just a matter of asking some of those additional questions, because what we're seeing right now is some of those that are just in life insurance or maybe just in annuities is they're starting to branch out into health. They're starting to come into your space in order to obtain more clients, obtain more prospects that they can use to cross-sell the life and the annuities. So the key is be the person's advisor for everything, right? For that whole three-legged stool, and just ask some of these simple questions. Do the policy review, see what they currently have. Ask some of these questions that get them thinking, right? And real quick, I just want to go to our website, Jacob, if you could pull that up. So there's one thing on the Benchmark website that I want to point out for your reference. So Jacob, if you could just scroll down just a little bit right there and see the tab that says quotes. If you could just click on that for me. Okay, so that's how quick and easy it is to get to the Fact Finder section of the Benchmark website. And some of these fact finders, you can see what they're listed there. Permanent life, if you need help with a permanent illustration. That fact finder is going to have all the questions we need to know to run those illustrations for you. Same thing goes for annuities, for long-term care, disability. We have one that's specific to those that have complications with their health history. And then we have places you can go to run the quotes yourself. If you kind of have a general idea, okay, I'll just run standard rate class and I want to see some term quotes. Up at the top, you can click where it says term and GUL, the instant quote. You can click that to run it yourself. So right now, we're going to pivot to questions. If anyone has questions and wants to use the chat feature, please do so now, and we'd be happy to answer some of those. We do have one question from earlier, Bob. Someone was asking about paying off the mortgage early, I think with the cash value life insurance.
If you have a policy, a permanent policy, whether it's whole life, whether it's UL, and you have built up sufficient amount of cash value, you can pay off that mortgage early. And a lot of people want to do that because as you get older and you approach retirement, the least amount of debt obligation you want to have as you move into retirement, because it'll be a drain on your cash flow in retirement. When you're retired, typically you don't have that earned income anymore, and you have to rely on what you have been able to put together during your working years to enable you to cover those things that come up. And if you have a cash value policy, whether it's UL or whole life, that you can draw from for unexpected expenses, or if you don't want to take that mortgage into your retirement years, pay off that mortgage. And again, if you'll take your little calculator and just take a typical mortgage, let's say $1,200 a month, for example, times 12, that's $14,400 a year. And if you can knock off 3 or 4 years, you're looking at $40,000, $50,000 that you could take out from a policy if you've been fortunate enough to build up enough cash in that policy to kill that mortgage payment from that point on. So that's one of the living benefits of having a life insurance policy that contains substantial cash value, and we can help you help your clients move toward that goal as they begin to build cash value in their life insurance policy with, again, some monies that aren't obligated otherwise. It's one of the best, if not the best place to put discretionary money for growth on a tax-deferred basis at a very competitive rate.
Yeah, and one of the key things to keep in mind with permanent life insurance that builds cash value is really the flexibility. And Bob mentioned one of the uses is you could do to pay off a mortgage, but it could be really anything. It could be an emergency fund. I personally have used my Indexed Universal Life plan for an emergency in the past, and it was very helpful because it's immediate access, right? I don't have to apply for some loan. I'm basically borrowing money from myself in that instance. So lots of different uses for some of that cash value, and even on a tax-free basis, which is
makes it even better.
Huge part of the beauty of it. So any other questions? It doesn't look like we have any other questions, but thanks everyone for being with us today. Appreciate you taking out your time. We're happy to get some of these slides over to you if you want to reach out to us and ask for those. We mentioned our phone number. If you want to reach our life insurance and annuity department directly, it's 704-527-1211. And definitely keep in your mind the fact that we're going to be doing the annuity training next month. We've done some housekeeping stuff since Benchmark arrived on the scene, but we do have big plans for annuities. We're excited to do more marketing and promotion of annuities, and we've already seen some great success working with agents who have asked about annuities. So happy to help you there, and we welcome your call. And again, thanks for being with us today, and I hope everyone has a great day and happy selling.